Yes. Okay, great. All right. So today I am going to share how to manage 70 TE credit spreads, and hopefully you'll get a lot of value in this. So let's get going. All right. All right. So with that, what can you expect? I'm going to show you how you can make consistent returns monthly based on margin capital at risk using 7 DTE high probability trades. All right. Okay. So with that, what will you learn? Number one, how to select the right strike prices. Number two, detailed entry, exit, and stop loss criteria to maintain consistency. Number three is how to prevent large losses by managing a threatened trade, and that's really important. How to know when to trade, the best time to widen spreads to gain an edge on a position. And number six is how to trade consistently profitable. All right. So with that, stay with me until the end. We have a special bonus for you guys, and hopefully you'll enjoy that. All right. So with that, number one, why are you here? You're interested in learning new strategies that will take your trading performance to the next level so you can finally leave that 9-to-5 career behind. Number two, you've seen, heard about, and read about others making money trading, and you know that you can do it. Yourself, but you're just not seeing your account grow fast enough based on your goals. And number three, you've tried different trading strategies. That you thought, okay, this is it, and only discovered that it's just not getting you to the place that trading results. All right. So with that. Number one, interested in learning new strategies. Number two, desire to see your account grow month after month and find the right strategy that provides consistent results. All right. So with that, let me know what you think. Is that kind of where we're at right now? So let me see a hand. All right. Anybody? All right. Hopefully, hopefully you are okay with that. All right. Okay, so let's get going here. All right, here's my family. I'm a regular guy. Just love trading. It's my kids on the left-hand side and my parents on the right. And I just love doing really, really good trading. And this is a great time to do it. All right, so let's imagine, and mindset is really, really important. So let's imagine what you would feel like if your trades were winners month after month, and you would see it confirmed by watching the size of your account grow at the same time. Also, becoming the trader that you no longer takes large losses, but consistently trades in according to a proven trade plan that's profitable over time, allowing you to grow your account month over month. All right. All right. So let's talk about what a credit spread is. All right. Unless you guys don't know this. All right. So a credit spread is a combination of two puts and two calls where the put and call that is sold is more expensive than the put and call that is bought. Okay, so that means you're getting a credit when you actually place the trade, and the selling of it is the process of getting that. All right. So in this example here, 40/50, 40/40 is the put, and you get a 50-cent credit, which times 100, which is $50. Okay, so that's basically what you're getting. You're selling the 40/50 put and buying the 40/40 put for a for a $50 or $500 position. The trade is considered to be a high probability trade. Okay. All right. So with that, though, also there are threats here. Okay. So a credit spread, you can get a bull spread here, all right? The risk reward, if you're placing a $10 contract, right, you'll get $650, and the risk reward is pretty bad. Okay, so that's what happens in a credit spread. And so the max loss is $9,350, which is also the margin requirement. Okay, so you have to give to get. All right. Okay, so let's talk about the options rate of decay. Okay, this is really important because this is what happens when you place a trade and you sell it, basically as a credit spread. The trade will always be going lower and lower and lower. Okay. All right, so from 68 days to 33 days, the rate of decay is around 34%. From 33 days to 5 days, the rate of decay is 57%. And from 5 days to expiration, the rate of decay is 100%. All right. And so that's why we do 70 TEs, which are really, really great trades to do. Okay. Because the the process of getting into that profit is easier and easier as the time goes by. Okay. All right. So implied volatility. The implied volatility. The ideal setup is with a market with a volatility moving lower while in a trade. Okay. So other profitability factors is theta, which is one of the Greeks that measures the rate of decline in the value of the option due to the passage of time. Okay, so when you place that trade, basically over time it decays, and that's where you get your profit. Okay, so this is a great factor for options for 70 TE, basically 3 to 7 days, and these are great trades to play. All right, profitability factors. Addition one, market direction. A market is trending in a way that the position will cause the premium to drop. If the if the market moves against you, the direction of the credit spread, you'll see that the premium goes. It could go price. The price could go in increase significantly. Okay. So with that. Okay, so let's talk about the risk management and guidelines and daily routines, right? So risk management, always trade with a plan. And I always say that because it's really, really important. So you gear up and make sure that you have a good plan for placing these trades, right? Determine the max loss and risk reward before entering a trade. Trade no more than 20% of your credit margin at risk. So if you have a $10,000 capital, you don't want to go past 20% of that because you could go lower, and that's why you want to have enough capital to be able to manage the trade if it goes against you. Okay, so it's very important. Do not allow more than 10% loss based on the capital you have, and a lot of people use 1% as well, but that's really important. And for highly trendy markets, post those trades following the trend. All right, you want to make sure that if you have a put spread, you want the market to go higher, and if you have a call spread, you want the market to go lower. Okay, so size your trades to ensure emotions are not part of the decision-making process. And I always say trade small and trade often, so that you have that expertise, and that way you'll get out of trouble. Okay. All right. Pre-market routine: review areas of support and resistance. Review the U.S. dollar. I always look at that along with treasury notes. And that's really important because that affects the the way that you put on those trades. Okay, so review futures in a trending direction, and then review the VIX, which is the important part of the VIX is that you have a higher positioning, and so it's very important to make sure that you can manage that. Okay. All right, and determine the credit spread positions and save those when you place a trade. Okay, so let's talk about the parts of 7-day DTE. Okay. All right, so what I like to do is when I enter a trade, I use a 1 to 10 minute margin or market open to basically a 10 wide. Okay, so the delta that I use is about 10 to 12 for a put spread, and 8 to 10 for a call spread. And when I place those trades, it's between 75 cents to 90 cents for a bear spread, and wider spreads provides greater distance to the market, but you have additional risk when you place that. All right. Okay. All right. Taking profit. I like to take profit at 10 cents, but typically between 50 to 20% is good to take a profit. Okay, so you can expire those trades, but I like to close them at 10 cents usually. All right, and you don't want to allow a profitable trade turn into an unprofitable trade. All right, so exit when uh, when you roll a spread, right, within 40 to 50 points, that's when I like to adjust those trades, right? And so the reason for that is because you want to you don't want to go in the money, all right? And then and what you can do is before you get to before you get into the money, you want to roll that trade and then roll it out so that you can manage that trade and not get threatened. Once you really get threatened, it's very difficult to manage that trade, and you have less less of a way to manage it. Okay. Exit is stop loss. I like to stop take a stop. Especially with in case of a bear spread, yeah, that way the adjustments will be better. So I don't like to manage a call spread. It's much more difficult than a put spread, and so that's important. All right, so let's get going into a real trade or several trades that I've done in the past. Okay, and so let's get through that. All right, so this is it's been a while, but trading is pretty much the same on these positions. Okay, so let's go through this. So this is a positioning between 9:15 and 2010, right? And this is what happened during that particular time. Right, so this is 18 SPX trading days, which which were 882 SPX points, and the market went down 6.6%. Okay, during that time, and this is how we managed this trade. Right, so number one, we put on a trade for at 6:15, so it's a $70 put, and then a call spread for $70, right? And so you got a $1.50, I'm sorry, $1.40 premium on this position, right? So the market closed, you know, the market went down, it closed, and we closed the position, the call spread at 10 cents. Then we added a put spread at 70 cents, and now the premium is $1.30. Okay, at that point we rolled the position, and now we got a debit of 40 cents. Okay, and this happens, and then we put on a call spread for 75 cents. And now we have a trade of 615 for 30 cents, and we have a trade for 75 cents. Okay, now we have the premium at 165. Okay, now you can see that the market went down. All right, and so we closed the call spread at 10 cents. We rolled the trade, and we got a 35-cent premium on it. And you can see here where we widen the spread. Okay. Now you can do that, but you have to be very careful when you manage the widening of a spread. Okay, because it can bite you. So now we have now we put on an additional put spread for 65 cents, and now the premium is $1.90. All right, so there we rolled the trade and rolled it for 5 cents, and you can see here that we went from 43.45 to 43.25, and then we widened that to 15 point position. Okay, so we got a 0.05 limit on that as a debit. Now we placed a new trade, which was now it's 20 wide, and the call is 110. Right, and so now the additional position, now we put on a put spread for 60 cents, and now the premium is 295. So you can see the premium is starting to move higher. Okay, as the market goes down, as the market goes down. Right, so now we close the position for 15 cents, and then we added a put spread for 60 cents, and now we're at a 20 wide position. So now the premium is 2.8. So now we roll the trade at we roll the trade, and we roll the trade, yeah, and we got a call we rolled it from 43.80 to 4,400, between 43.25 to 35. All right, so we got that position in, and then and then the trades that we have now are the 615. So we rolled that trade three times, and then we added a position for $1.60. Now the premium is 3.9. You can see it going higher. Right now you can see that the market went up, and it went down, and then it went back up. So now we closed the trade for 25 cents. We rolled the trade. We rolled the 615 trade, and we got a 15-cent limit on that. So it's a debit. And now our trade is 45 cents and 80 cents, and the premium is 3.5. Okay, now you can see the market went down again. So we closed the trade at 20. And then we rolled the 615 trade, another roll for 40 cents. Now we have the additional trades we have is 95 cents and 100, and our premium is 3.7. So overall, we're still getting, even though we're getting threatened trades here, we're getting the premium is moving higher. Okay, so now you can see we got a nice big roll up here on the market. And so we closed the trade for 30 cents on this position, and then rolled the trade that was going higher and got a 25-cent debit on that position. So now we have the trade at 70 cents, and our premium is around 315, which is around the same that we've had. Okay. All right. So now you can see the market went really up, and so we rolled the position. We rolled the position up, and or actually, yeah, this one. Okay. Yeah, we got a 5%, or I'm sorry, 5 cent debit on that, and we have the position at 6. This is the additional 7. We had 7 rolls on this. Okay, and now we have the position here at 65 cents. So now we have a premium of $3.1 here. Okay. Now on October 10th, the 615 expired, worthless, and that's what we got. So during that whole time, right, even with the market, going pretty low, we were able to get a position profitable during that time. Okay, so the question is, would you like to follow our trades while you learn using our short-term strategies, and you can get that process with consistently profitable trader? Okay, of course you would, right? So remember, we talked about interested in learning new strategies, desire to see your account grow, and find the right strategy for that provides consistent results. And this is it. Okay, so this is a way that you can learn how to trade these positions, and a lot of times, the market can go the way that you want it to go, or sometimes it goes in the way that it you don't want it to go. But it's a way to manage these trades so that you can eventually get profitable. Okay, and so so it's time to break those barriers. Okay, are you going to keep doing what you're doing, and hopefully do something that will work, or are you going to finally take the steps that it will take you to the place where you can actually manage those trades and things work? Okay, so it's not easy, but if you have a no quit attitude, a commitment and discipline, and having an edge, you'll get there, right? And this is what success is, right? Okay, so our trade alert service is the positions that I use are automated. Okay, it comes out of my trade account, and it works. Okay, so whether you're getting started or already successful in what you're doing, this is a great way to learn in how to manage these trades, right? So when we put these on, we have two types of positioning. One is, there's people that come in and they're they're asking questions. And we have a lot of traders in the room here, and they ask questions and what to do, and we manage those. Okay. The other part is we have channels, and these are the actual trade alerts that we put on a daily basis. Okay. All right. So with that, we have a lot of trader success stories. Uh, we've brought in people, and they've come in. A lot of people have come in, and they leave just because they've learned what to do. And so this is the way that we manage these trades. Okay. So the question is, um, are you gonna try to manage this on your own, or you can manage it, and get help with an edge, right? So my guarantee is that if you subscribe for 1 month and lose money by following my trades, I will refund your subscription by $1.25. Okay. And it's really never happened before, but it works. All right. So we have basically a 5-tier subscription plan, and let me share that with you real quick. Okay, you should be able to see the alerts, and actually, I just want to mention to you that right now we are open in our trade alert service, and you can join at this time. But normally, what happens is we close the doors, after we bring in the new subscribers, and and then they get acclimated with the trade alert service that we have. Okay. And a lot of times we get a lot of questions during that period of time, and that's why we open it and then we close it, so that we focus on the traders that we have. All right. So the program that we have is that we have a free list that you can join, and that way you can get acclimated with Telegram and what we use. And these are free trades that you get, right? And we give them to you pretty much every day, and show them to you. All right. And that way you get acclimated with Telegram and everything else that we're doing. And so the paid subscriptions are the 59 plan, the 99 plan, and the 129 plan, and the 199 plan. All right. So all of these positions here, all of these the subscriptions have a tiered approach. So for the 59 plan, we have the monthly expiration and the subscriber trades. And as far as the subscriber trades, we do have traders that trade for a living here. Okay. And they share their results to the group as well. So the 59 plan is the lowest paid plan that we have. And then we go into the 99 plan, and then we get the 0 DTE, 7 DTE, and premium trades. And then we get the full-time trader plan, and after that, we get futures alerts and ES options and futures. All right. So and then the highest plan is the 199 plan, where we get fast profit trades, and these are this is Michael that's been with us for a while, and he's an amazing trader. And if you see his performance, you go wild. So he does really, really well, and that's why we have the premium trade, and those are fast profits, and they make a lot of money. Okay. All right. So with that, hopefully um, those things, you know, are of value to you. So the thing is that, is this for you? Do you want to make, do you want to learn a step-by-step process to gain income in a market that goes up and down? Do you want to finally break those series of losses and account drains? And do you want to be consistent over time? And this is it. I mean, this is a great time to be able to do that. And hopefully, um, uh, if this was a value to you, I mean, hopefully this was, this will work for you. Okay. So what you get is $20 off for life, and we are currently open at this time. All right. So you can join at this time. In another week or so, we'll be closing the doors again, and we'll have to wait for 3 months to get in. All right. So you get $20 off for life, and professional traders and subscriber trade groups, right? That the guys that are in the group trade for a living, and they share their trades. We have training and education, and automated signals with 6 seconds to 30 to about 60 cents when we get those signals get in. So we have trade entry, fill price, price target after fill, and also managing trades. We help you manage those trades as well. And my guarantee that you will make money on the first month. All right. All right. So do you have any questions out there? Yeah, we do have performance stats on all the positions that we have, and we have the newsletter. And if you don't have the newsletter, you can send me an email. It's Al at Al at options. Al at simpleoptionstrategies.com, and you can ask me for that for those performance positions. Okay. Anything else? All right. Thanks. Appreciate that you guys have come in. Hopefully this was of value to you. And if you have any questions at all, I will answer your questions, and just send me an email and we're good. All right, guys. Thanks. And yes, you can do this full time, especially with if you're trading the 59 plan. That's the one that I started with, and it's a monthly plan, and it's great for people that has a career. Okay, and I was in there for several years and doing that, and that's how I learned. All right, guys, thanks. I appreciate your time, and hopefully we'll see you in the trade alert service. All right, thanks, guys. Talk to you soon.